Hello and welcome to P&TO Financial Services. This is Pranav Patil. Today we will discuss REITs, Real Estate Investment Fund, and 5 precautions while investing into these funds with the case of China's Evergrande company's issue to avoid the same situation in India. So let's start this discussion. We will in today what we'll do first we will understand what exactly happened in the China's Evergrande company, and then we will discuss 5 suggestions to avoid this kind of situation in India. As an investor perspective, I'm not here to tell you do a real estate investment or not. I'm just we will clarify our views from a investment perspective, from a investor awareness perspective. So let's start this discussion with the China's Evergrande company. So the Evergrande company was started by Hugh Ka Yan in 1996-97 in China. Uh, in 2017, this person, the founder's net worth was $43 billion, and today or in the 2020, it become almost zero. We will understand why it exactly happened. Now, if you look at this company's last 20 years performance from 2004 to 2020, in the last this 16 years, the company has given the growth of 44% every year. The company holds the on that year, the company was holding somewhere around $150 billion assets on their balance sheets. What their job is in China, basically you can't buy the land from a people and you develop it. So what exactly happens, they buy the land from a government, they develop the that land, they do a construction, and they sell their flats to general public. Now if you look at the China's urban population in the last 20 years had gone up very drastically from 450 million to 900 million. That's one of the reason there was a lot of demand in the urban sector, and these players, the private players, enter into the market and they created a huge amount of flats in the economy. Now if you look at the employment from this sector, the property sectors in China provides almost 12% employment to all over employment. The property sector's contribution to GDP in China is almost 28.7%. In India, it is 10.5%. In the UK, it is 20%. In the US, it's 17%. Just imagine how much China has spent, or the Chinese economy, had a development on the property sector. Beyond imagination, trust me. Now, if you look at in the last this 40 years from 1980 to 2020, there was a crazy returns Chinese people got from a property investment. 40 years investment, they got a crazy return, and in the last 2 years, that has become the rate has become 20 years back. Now, why exactly it happened? What then the such a big company, $150 billion assets, and they have a global exposure. It's a Evergrande is world's biggest, one of the world's biggest property constructor. So what exactly happened in a less than a year? What happened? There was a lot of empty houses in the China. Currently, it is 90 million plus empty houses in the China are available for a sale, constructed, and these houses were not getting sold. So the numbers is like a Germany's and UK's population entirely, we can put it into these houses. So these houses were not able to sell it, so that's the reason Chinese government hold the new project. They asked, they did not allow to buy the new lands for a property consultant or the construction companies. They asked to sell it out, close this project first, and then you start it, because there was a lot of new houses are available. That's one of the reason the business of this company got choked. There was no new cash generation from new projects, and they missed the bond payment in 2021. First bond payment they missed in 2021. That created a huge panic in the international investors or global investors, which led to China's property bond market crashed very drastically. When the crash happened, there is a kiosk comes, what exactly happening in the company. So all the people went to the company asking their money back. And that's where the bubble bursted very badly, because everybody comes at the same time, then the company is not in the position. It's not Evergrande or anybody will not be able to provide the cash or sustain unless you get someone backup, good backup. So this is what I tried in a very simple word what exactly happened. Now let's discuss the, if you look at the China's bond market valuation was somewhere around more than $20 billion invested by investment bank, pension fund, and the big the private players as well. So the entire bond market is crashed, and now it is, they are in the position to return off entirely. Amount is very big. This one company has created a huge amount of panic or the huge amount of chaos in the global funds and their returns. Now, this is all about the China's Evergrande case. Now we will understand India's property market. Basically, if you look at the India's property market, currently it is $200 billion entire market, and by 2030 we are expecting it will reach to $1 trillion. So average return every year it may go like 12 to 14% range. This is what expectation. If you look at the direct investment, global foreign direct investment is like 29 billion, and in a year's time another 20 billion we are expecting. So direct investment, I'm talking about more than 50 billion it will be. In the real estate sector, whatever the loan India has, in the last one of video also I mentioned this statistics. If you have a 100 rupees real estate loan in India, 55 rupees is owned by Mumbai, Thane and nearby this area. 13 rupees owned by Bangalore and Pune. 13 rupees owned by Delhi, and the rest is like a 19 rupees, other states and other cities. So 5 cities are contributing like a more than 80%. Just imagine. Now in India, if you talk about the empty houses, constructed empty houses is almost 1 crore 20 lakh. So it's like a 10 million, whereas the China has like 90 million. 9x difference. In the last, if you look at the India's property returns, property sector's return, in the last 2 decades, it has given a very, very high returns, more than the gold or FD sectors. But in the last 5 years, the prices of real estate has not increased. It is like a stagnant. In some of the cases, like developing areas, in that particular cases, it has increased. But overall perspective, if you talk about, there's a hardly change, like a 4 to 5% increase happened, not more than that. In the last 5 years, I'm talking about. Now, if you must have heard in the last year as well, in India last 2 years the sale of property sector has gone drastically upside. Why it happened? Have you ever thought? The reason, because coronavirus. People were actually insecure in the COVID time, in the lockdown. They wanted, very passionately they wanted to buy house, or because they were feeling insecurity. If something happens, if I'm not there, what will happen to my family? We should have the house. That is the one main reason. First is the insecurity, second is the anxiety. In the COVID, there's a lot of anxiety with in the people's mind, and that's one of the reason there was a boom in the last 2 years in the property sector in India. Third reason is government gave a good tax discount, which led to again people to think to buy a house and own it, the property. And the last reason is there was a lot of price crash happened in the COVID time, and that's one of the reasons those people who had a good cash in the hand, they invested it. These 4 reasons led to huge demand in the last 2 years in the India's property sector. Now when I say India's property sector, mostly this demand came from Mumbai, Thane, Pune, Delhi or Bangalore, these 4 to 5 cities only. Now this is all about the India's property sector. Now we will discuss the REITs, basically what it is. REITs is like nothing but real estate investment trust. What it is, or real estate fund. What exactly they do? Suppose I am a company or I am a person, I have a good knowledge about the property sector. What I do, I go to the people, I put my money as well into that bowl. I ask everybody to put money into this bowl, and I invest that money into real estate. I actually buy the different properties. I put them. I put once I buy those property, I gave that on the rent, and whatever the income I get it, I distribute that income. More than 90% income has to be distributed with the shareholder as a dividend. That is called as a REITs. Now this is the one way of looking at the REITs. Another way of, there are certain funds or REITs who does a financing. Suppose I am sitting in the Hirandani, there is a tower is getting built. The cost of tower is like a 900 crore or 800 crore. I have a REITs. I will finance those entire tower basically, and once it gets constructed, it will be sold to the people. I will make a money. So this is the another way of making a money via REITs. This is what happens with the real estate fund and the REITs. In the simple word, I try to explain. Now, why I'm saying 5 major suggestions or the precautions you should own, think over it while investing into this fund or buying the properties in India. First precaution, you have to see the global warming issue location. Now, if you look at, for example, if you are buying a property near Mantralay or South Mumbai, you need to understand, when you buy a property, you take a loan, right? So that loan, it will take a 15 to 20 years to repay that loan. So what will be that in that location? Is there any global warming issue? If you look at in that area, I'm specifically talking about the South Mumbai or one particular location like Mantralay, that area by 2050 or after 2040, it will be underwater. So if you buy a property right now at that area and you took a loan to buy that property, by repaying that entire loan, that property will be underwater. You will not be able to use it, that property. This is the biggest risk which we are seeing at the prime locations, and that's one of the reason the prices are stuck or prices are not going up. This is the major reason big players are not entering at the prime location with the big pockets. Second, if you look at Mumbai, Pune, Delhi, and Bangalore, my suggestion, the prices are at peak. In Hirandan, like if you wanted to buy a 1 BHK, it's a cost like a 1.5 CR, or 2 BHK like a 2.5 CR. So what my point is that when you buy a property, you take a loan as well, right? So think about that 15 to 20 years, how much interest you are going to pay. Suppose if I buy a property, say 1.5 crore, and in the next 20 years, if I pay 3 crore rupees interest, so my net cost of this property is like 4.5 crore plus repair and maintenance, minus whatever the rents you will get it. That is your net valuation. This is how you try to calculate it, and this things you have to do it only with this prime locations only, or the 5 cities only, because the cost is beyond has gone very high. That doesn't mean it will come down or crash will happen. I'm not saying at all, and my intention is not that as well. I am trying to give you simple precautionary steps while investing into these funds and your personal money as well into real estate. Now, when it comes to the funds, when you invest into funds, REITs, or any real estate fund, you have to check where they are investing the money. That is, if it is a global warming issue location, then you should avoid it. This is the second. First is a global warming issue location. Second is, do a calculation. How much interest you are going to pay? What is the principal? What could be, total value after the repayment of the loan? That entire property sector. Then the third is, when you invest into REITs and real estate firm, just try to be careful. Check the document. Just don't enter into people are investing, lot of people are investing, the company is big. Just imagine 150 billion assets worth, and now it's like a bankruptcy. The guy who had a $43 billion net worth in 2017, today it's almost zero. So all the people are investing into REITs or real estate fund, don't go with the flow. Just try to understand. I'm not discouraging you to not to invest or invest. What I'm trying to say, just check the details where they are investing. Then the fourth is, you if you are investing, you wanted to buy own flat to stay yourself, then you don't need to think much. Of course everybody wants their own house, so you don't think much about while doing an investment. It is very important, if you are buying a property which you will put on the rent, then you have to think lot, like how much interest you will pay, what could be the principal, and what could be the valuation after 20 years, and the location of that uh, property. If you look at the growth rate in India, it is expected 12 to 13% in the last 10 years in the property sector. So average you can expect 5 to 7% minimum. I'm saying minimum you will get the returns in the property sector. That's for sure. Wherever you invest, this is the statistics which says minimum 5 to 7% returns you will get it. I'm talking about the long term perspective, not like you buy a property today and after 12 years you wanted to sell, and if you are expecting a good returns, it's better to be from a if you have a long term view to invest, then only you go for it. Otherwise it's better to stay off from the investment. This is all my 5 suggestion to avoid China's Evergrande kind of case in India. Thank you for your time. Have a great day ahead. Thank you.